What's up, everybody? So in today's video, we're going to be going over the top 10 mistakes when applying for a loan. I have with me Alex Norchini, my top lender, and obviously I'm an agent and investor myself. So between the two of us, we've seen a few things. We've seen a few mistakes. So that being said, let's jump into it. What's going on, Alex?
Hey Jeff, how you doing, buddy?
Pretty good, man. Pretty good. Look, we're just trying to help people not make these mistakes when they're applying for their loans because we've seen it all pretty much.
Oh yeah.
So how about we start with number one, just like the basic preparation for buying a house.
Yeah, so I mean, really, like one of the biggest mistakes is, especially a first-time home buyer, they don't talk to someone, either a lender or realtor, until like they're trying to buy a house like that day, and you want to make sure you're probably talking to someone at least 3 to 6 months before. You may be able to do some research online that only helps so much. Talking to a lender definitely would help, at least so you know how much you need to have saved. Down payment requirements may not be as much as you think. Also, like some people think there needs to be a 20% down payment when, in reality, you can put as low as 3% down, and that could also eat into someone maybe waiting to buy for a year or two when they could buy now also. So yeah, just talking to someone early on to get an idea of, what their monthly expenses look like, income, how much they qualify for. Maybe they don't qualify for what they think they can. And then we can work on paying down debt, like those type of things.
Yeah, you should basically, when you're looking to buy a house, you should start early in the process. And, yeah, 6, 12, at a minimum, like 3 months before you're looking to buy, and talk to a lender or at least an agent like myself who can refer you to someone like Alex, and start doing, saving money, building up your credit score, and see what you can afford. Because some people have no idea. I mean, if you've never bought a house before, I've talked to some people and they're like, oh yeah, I'm looking at like $700,000 properties or $200,000 properties when really they can afford much more, or vice versa. So I just lost Alex.
Sorry, I had to close my door real quick. It's a little commotion in the background.
So basically you want to start early. The next thing you want to do is it's not like there's 100 different types of loans, but there are like several different types of options. There's like adjustable rate. There's like the 3.5%, like you mentioned, for first time home buyers. There's conventional. So you want to have your lender talk to you about all the different kinds of loans before, because some people just think, like you said, it's just only 20% down, but that's not the case.
Yeah. And, most people are just, in terms of like loan products, is just like the 30-year fixed. And, like this year, especially, that product, although it is popular still, a lot of people are looking to do adjustable rate mortgages. And we did a podcast on that. So you may want to check out, more information about the adjustable rate mortgages. But that's a product that, probably would benefit a lot more people, especially this year with rates being much higher. And yeah, there's other products such as like FHA versus conventional. FHA is a great product, especially for people that have credit scores under 700. And that's something that, when I'm talking to someone up front is just letting them know, like, here are your options. And I would recommend going with, either FHA or conventional based on your situation.
Yeah. So bottom line, evaluate several options. You'll talk to your lender. Your lender is probably going to give you, if they're a good lender, they should provide you with like 3 or 4, even 5 different options, depending on how much you want to put down, monthly payment, how long you plan on staying. If you're only planning on staying in the house for like 5 years, it might make more sense to do like an adjustable rate mortgage. And FHA is only 3.5% down, which is really cool. And that's what you helped me out on. You can buy a 4-unit apartment building with an FHA loan. So most people, they're not even aware that you can buy like multifamily. I mean, it's small multifamily, but you can purchase a freaking apartment building with an FHA loan.
Yeah, it's the best product out there. The lowest down payment for a multi-unit. I mean, it's not even close. Like no other product can get close to that. So yeah, FHA is definitely something I'd recommend if you're trying to buy 2 to 4 units. It's a great product.
Yep. Okay. So the next mistake when applying for a loan or, going through the process is quitting your job or making a significant purchase like a car or something like that. Like some people, they think, once the lender gives them the approval, they're like, oh, I'm in the home free. And now I can go buy like that brand new BMW with like a $700 a month payment. And that can totally wreck your finances from a lending standpoint.
Yeah, absolutely. Yeah, you just want to be transparent. I've had someone who literally got laid off like 2 weeks before closing. Thank God it was a refinance, not a purchase. But they didn't tell me. Like we found out because we're trying to do a final verification of employment, which we have to do within 10 days of closing. So if you get laid off, you don't tell us. Like we're gonna find out. Especially if it's within 10 days of closing. So you just want to be upfront. That person, that was during the pandemic a couple years ago. So, she ended up getting a job pretty quickly afterwards. We did refinance her, thank God, because she took advantage of the lower rates. But yeah, you just want to be upfront.
How does that work actually with the verification of employment? So they call your employer or email or something like that?
Yeah, like so there's two verifications of employment. The first one is just to verify like income, like start
Mhm.
date, how long have they
Okay.
been working there for? And then the one we do is really quick. The final one is just making sure it's usually a verbal, like my processor will call them and just confirm,
Mhm.
is this person still working here? And if they say yes, then okay, we're good to go. We don't have to verify anything else. But that one's a quick call. But if they
Yeah.
don't work there, we'll find out. We're just trying to make sure they're still there. That's all.
Right. And then some people like I had someone that was in a job that they didn't really like too much, and they were almost at the point of quitting. And but we were in the middle of this process, so they basically waited, probably like a couple weeks, or I mean, technically, you could probably wait just a day after closing, and then quit your job, right?
Yeah, no, I mean, so I've definitely had situations where people are trying to change jobs in the middle of the process, quit jobs, or maybe start a company and quit their current job, not thinking that's that big of a deal. But yeah, just talk to someone up front. They can advise you. Like in that situation, if someone's trying to quit their job and go to more of a self-employment type of position, then you if you don't want to wait 2 years, because basically if you go self-employed, you're going to wait 2 years to buy a
Right.
house at least. So if you're trying to buy a house before then definitely stick with your job, buy a house, then get into it. Because the minute that you buy a house, we don't really look into it anymore. Like you have the house, as long as you make your payments, no one really cares. So
Yeah.
that's my advice.
But yeah, they will check employment. So,
Yeah.
um, yeah, and like little side businesses and stuff like that, they'll take those into account if you have a lot of debt on a side business too. So, something to keep in mind. Another thing is like you want to like when you're purchasing a property, you want to do your own research as much as possible. You want to rely on the professional. You should rely on your lender or agent. So long as they come referred. But you should also not just be going into this process like blind. And it's almost like when you go on vacation somewhere, it's like you're going to look up different places and things like that. You might not be the expert, but you're going to have some general idea, of what's going on and everything like that.
Yeah, yeah, absolutely. I mean, I think like people should do their own research. Also, just have an idea in their mind of like what they're looking for, what area and type of property that they want to buy. And it's hard to really do research, I would say, on the lending side of things. The data is kind of unreliable and it changes constantly online. So I definitely talk to like multiple lenders is what I would say, like one or two lenders, get an idea of like what products are available. They can advise you, on your situation. And, maybe it's a little bit different than what you read online. And it is good to do some research online, but definitely, talk to just multiple lenders, earlier rather than later.
Yeah, and the thing is, like, yeah, when you do research online, you'll get a general idea, which I think is good, but it's also there's going to be like every lender and every bank is going to have like slightly different options. So that's why you always want to talk to your lender because what you read online might be slightly different. They might have slightly different requirements than once you go and actually talk to your lender. Um, all right, yeah. Next up, yeah, we kind of talked about it briefly, but like starting a business. So you're going to need 2 years of tax returns. So if you're self-employed or anything like that, just keep that in mind. I know I've had friends and stuff like that were starting their own businesses but they wanted to get into house hacking, multifamily, but it was like you got to have those 2 years of tax returns. Like you shouldn't have quit your job before. I felt bad, but you know,
Yeah, I mean, this has happened many times for me, and even people that are like realtors. Like, I want to help them out. They're new to the real estate game. They're realtor.
yeah,
They just start the first year. They're trying to buy a house, and I'm like, look, you got to wait like 2 years because even you're technically self-employed if you're a realtor because you're
yeah,
unless you're working, a salary job as well on top of being a realtor, which some people do. But most people are just, if you're a straight realtor, you have to wait a couple of years to have 2 years of commission income, verified. So yeah, definitely be aware. It's going to be a long process if you're newly self-employed. You have to wait a couple of years.
yeah. The next thing is like choosing the wrong agent and lender. So a lot of times people think it's like a very simple thing, like, oh, you just upload your documents and you get the loan. But from firsthand experience, like I'm sure Alex, you could tell 100 different stories. But if you get the wrong lender, your process could be delayed. There could be issues going on. You could have 100 different things happening. Although it seems like a simple process, I've seen it where I've had to get order like 3 appraisals on one property because the lender kept messing everything up. Um, they use the wrong numbers. There's just a million things that can happen. You want to find an agent and a lender that is referred from a friend and has good reviews online. So if you're looking in the DC area, actually, if you're looking nationwide, because we pretty much have references and resources nationwide. If you're looking for a good real estate agent or good lender nationwide, reach out to either one of us and we can point you in the right direction. But it's very important to have a good lender and agent.
Yeah, absolutely. And if it's your first time, you may not know if they're a good lender or agent. So then you'd have to really go by like reviews online and then just like asking a lot of questions. Like especially if you're a first time home buyer, like don't be afraid to ask even the stupid questions and trying to get as much information as possible. And then also like communication, I would say is huge. Making sure that the person you're working with, maybe they don't, some people just they don't text. Maybe it's like you're working with like Bank of America and some of those guys, when they're clocked out, right? But you want to work with someone that can answer the phone on the weekends, after hours. They're able to text or call you, after 5 p.m., which a lot of the times most people are writing contracts after 5 p.m., on a weekend or weekday.
Yeah. Yeah. We just had a deal with someone on my team where the lender just didn't do a good job of getting documents and stuff like that. And they weren't very responsive or helpful. And it turned out like ended up in this huge mess. The financing got rejected and it was this whole, we had to get the earnest money deposit back. And if they had just gotten a recommendation, a better lender that had good reviews, this wouldn't have happened.
Yep.
All right. The next mistake is basically buying the most expensive and like biggest house possible. So like, let's say you approve just because you're approved for $1 million doesn't mean you need to spend all of that. I know plenty of people that they might be approved for $1 million, but then they only spend like 600,000.
Yeah, 100%. I mean, and the thing is, like, if you're approved for $1 million and like you got to be comfortable with that monthly payment. So everyone has different spending habits. I know like what I could get approved up to, and I'm never comfortable with that payment. I like to be well below that. But some people like might be okay with it, like if they don't spend a lot. Like I like to travel, I like to spend money on other things. I got a kid, that's expensive. So, so there's a lot of, everyone's different. But yeah, you definitely want to probably be below like what your max qualification is. And there's definitely outliers, like some people might have roommates, and they might get rent that we don't count. We don't count the rental income. So we're not allowed to count rental income on a primary residence. So in that case, maybe it's okay buying up to your max, but it really just depends.
Yeah, I just had someone, I think the house, I don't know the exact price, but it was like I got the sense it was at least 1.5, maybe even as high as 2 million, but it was like a 3-unit and the guy was living in like, it was like set up as like the basement was like 2 or 3 bedrooms, the middle floor was 2 or 3 bedrooms, and then his was like 2 or 3 bedrooms. And he was making an incredible amount of cash flow every single month. And in that case, like it made a lot of sense for him to max out his budget because he could basically buy this like apartment and live for free. Actually, he's probably getting paid to live there, which is pretty crazy. But it's interesting in real estate, being in real estate like 10 years, I've seen that like the people that have like the biggest houses are oftentimes not the wealthiest. It's usually the people with like kind of like the average house, driving like the Toyota Corolla that are the like multimillionaires. And then it's the people that are trying to look rich with the biggest house that aren't really necessarily the richest ones.
Yeah, absolutely. I mean, I've seen people that own like 20 properties. They live in, a fairly average house. And like this one guy did a refinance a few of his properties. He had $15 million worth of equity and like and he doesn't spend that much. I mean, he just doesn't. And he doesn't have much debt. He lives in a very modest house. Like you would have no idea this guy is that wealthy.
And he probably drives like a pickup truck and,
yeah,
it's a millionaire next. Read the book, The Millionaire Next Door. That's what it's like. The millionaire next door is not the person with the BMW and the big house and like trying to flex on everybody. It's the person it's the low key person.
Yeah, absolutely.
All right. The next mistake is not getting documentation to your lender in time. And I've seen this happen where the buyer just doesn't give you the information they need, because you're gonna, once you go under contract, you gotta get Alex all the information he needs to get the loan done.
Yeah, I mean, so like there, you just need to have someone like I try and communicate up front. Like, we'll give you deadlines throughout the process. If you don't meet the deadlines, we'll reach out and bug you for it. Most of my clients like get me stuff on time. Is I think it's if you communicate it how important it is up front, it shouldn't be that big of a deal. Most of the stuff is pretty easy to get. Like all of it, you just log on to your bank accounts, you send me your bank
Right.
account information, pay stubs. Like it's rare, like to get asked for stuff that takes longer than like 15 minutes. It shouldn't
Yeah.
take that long.
And maybe that's more when you're like self-employed or have some unusual income and that type of thing, where the lender needs like further verification. But basically, stay on top of all your documents, give them to your lender as soon as possible.
Yeah. Yep, definitely. It makes for a smoother process too. The last thing you
Yeah.
want to do is delay or not. And I guess the more important thing is like you're contractually obligated to meet certain contingencies in the contract, right? So there's financing contingencies. Those contingencies could be 14 to 21 days. We try and get everything, submitted and underwriting within, the first 8 or 9 days. So we don't even worry about that type of issue. And sometimes we can submit it earlier if we have the documentation from the client.
Yeah.
So yeah, just
Yeah, I was going to say, yeah, sometimes you can actually, if you get the lender everything they need, sometimes the lender's like, look, we're good to close like a week earlier than expected. And so sometimes you can move in a little bit faster if everybody's okay with it, especially if it's like a vacant house. Like every seller is usually trying to close sooner.
Yeah. I actually had someone last week. We already had everything clear to close. So we pushed up closing a couple weeks. So
Nice.
ended up working out, and the seller was super happy. The buyer was trying to move in as quick as possible, so everyone was
Nice.
pretty happy with that.
Nice when the deals work out and everyone's
Yeah, right.
happy. Okay, next mistake is closing your credit accounts. So some borrowers think it's smart, like they might have like 5 or 6 credit cards, and they'll say, "Look, I want to be responsible. I'm not going to spend anything, so I'm just going to close down my credit cards since I'm not using them." But that's going to erase a lot of your debt utilization ratios as well as your credit history, and that's going to actually lower your score, which is not good when you're buying a house.
Yeah, I see this all the time. This is pretty common. Yeah, it's hard for people. It doesn't really make sense, right? Like if you're closing on a credit card, it's like, oh, I'm getting rid of debt, but you're really just getting rid of good credit history. So it definitely dings your credit scores. And there's ways to try and improve it in the short run, but sometimes it just takes a while to improve it. So yeah, just something to be aware of there.
Yeah, even if it's just like that little Macy's, like that old Macy's credit card that like everyone used to have, or whatever it is, like just don't mess with your credit at all before closing. Don't close it down. Don't apply for new credit. Don't buy anything big.
Mhm.
You know. All right. The next mistake is not getting pre-approved before you start looking. So I've had some people that they're looking for a house and they're talking about different price ranges, but they have no idea what they could afford. And it's just kind of a waste of everyone's time because the buyer doesn't know. The buyer thinks, oh, I might be able to afford this, but they really have no idea. They might be able to afford way more, way less. And then if they find something they like, then they have to go and actually apply for it and then find out. So you want to get your pre-approval done like 6 months before you even start looking, really.
Yeah, definitely. And actually, me and you were working on a deal. Was that like 2 or 3 weeks ago, where you were going to show her a property, and she wasn't. You made sure she was pre-qualified, and I talked to her, and she wasn't really
Yeah.
ready to go at that point.
Yeah.
But yeah, you definitely want to get pre-approved. You don't want to waste like your time or the realtor's time, like looking at houses that you can't afford. And you definitely want to make sure like you have everything in order too. Like if it's improving credit scores or getting the right money for down payment, you just want to have everything ready to go. So the last thing you want to do is find a dream house, go and see it, and you can't pull the trigger on it.
I've seen that happen where it's like the weekend too. It might be like a Saturday. They see a property on Saturday. It's the perfect one, but then they don't have their approval letter. So then they got to scramble and get everything together. And it's like this whole,
Yeah.
and then it's like, by that time it's already under contract. So
Yeah.
yeah. All right. So
Absolutely.
if you guys are watching this and you're interested in purchasing a property, I'm an agent in the DC area, but I have recommendations nationwide for different home buyers. And then Alex is a lender in the DC area, but he also can work nationwide as well. So definitely reach out to us in the link below if you have any questions. We'll see you on the next one. Bye.
See ya.